Hi, this is Jeffrey Kurt Financial Group. Today's Wednesday, July 15, 2026. So I want to highlight a couple of things that happened yesterday and how it reflects, I think, on a larger scale, some of the things going on in our economy and in the markets. Number one, IBM coughed up a hairball yesterday. So they pre-released and pre-announced disappointing numbers. They won't have as much sales as they expected. They won't have as much bottom line as expected. And the numbers going forward for the rest of the year will be declining, not growing. And, one thing is when they pre-announce, they realized the numbers were bad. Rather than wait until maybe next week or the week after when they were scheduled to report, they released these numbers. So as a preliminary, there's more detail going to come out when they actually do the full report. But again, once management's aware of a factual situation, they're required to release, and that's what happened yesterday. The result was IBM had its worst trading day ever. That includes the 1987 crash, which was, IBM was a Dow component then, and probably the 29 crash. I don't know what IBM's inclusion was in the Dow or not, but in any case, worst trading day ever, down 25%. The other big thing yesterday, I thought, was the CPI report, Consumer Price Index, lower than expected, and all the expectations of forecasts have been lowered, and it was even lower than that. It was down from 4.2% in May to 3.5% in June, a significant drop, and again, less than expected. This takes the heat off of the pressure to raise interest rates in the next couple of meetings, I think, and that's kind of drove the market yesterday with a nice day in the market. I think also returning to the IBM situation, I think this just points to how price to perfection this market is. And if there's any disruption, any hiccup in terms of releasing and developing all of this AI, data center, chips, and all these different interrelated situations of business and services, that stock prices could drop quickly and dramatically. And again, IBM, I think, is a good example. So in any case, I think that's one thing that just as an illustration as to the condition of the stock market and financial markets in general is that they're overvalued, but, and any disappointment is going to get punished quickly. On the brighter side, there were some really good bank earnings from Goldman Sachs, BlackRock, Morgan Stanley, JP Morgan, and those stocks were all up yesterday. So again, IBM, I think is an illustration. CPI better than expected. We'll see how that plays out. And we're kind of just kicking off earnings season. So we'll be back on Friday with more updates. Thank you for listening. We'll talk to you on Friday. Thank you again. Goodbye.